corporate conversation now. Satin Creditcare is the stock in focus after the company reported its fourth quarter results. The numbers were a mixed bag with strong business momentum. However, asset quality saw a bit of a deterioration. To take stock of the numbers, the outlook and a lot more, we are being joined by HP Singh, the chairman and MD of Satin Creditcare, for some questions. Mr. Singh, good morning. Thanks a lot for joining in. Now, your AUM growth was around 30% during the quarter. Disbursements were up 11%. But with inflation and the kind of interest rates that continue to remain on the higher side, do you expect to sustain this kind of business momentum going into FY25 as well?
Absolutely. I think, the guidance which we've given earlier, as well as the performance which has happened in the last 1 year, I think, we've surpassed our guidance of 25% plus. And we've given our guidance of 25% plus again for the next year. With the income levels probably coming up, with the asset quality, as what you mentioned, we've actually beaten our guidance of about 1.5%. We've been below that. So for us, I think, we look at from that standpoint of view, the guidance for growth is definitely going to come in for FY25.
Mr. Singh, before we talk more about growth, I just want to address the asset quality issue, because looking at the granular numbers, the GNPA ratio moved from 2.4 to 2.49% in absolute terms. The number of bad loans, just as a quantum, it increased by about 13%. And I'm looking at your provisions. Provisioning is also pretty high. Year on year, it's up some 400%, but even quarter on quarter, provisions have moved up to about 64 crores in Q4. So what's going on really? Is there some sign of stress, and is this a precautionary rise in provisions? Can you just give us some more, color on this?
No, so absolutely. I think you should look at it from the standpoint that FY23 had a very higher provision, as compared to what FY24 has been. And if you look at quarter by quarter, definitely as the denominator base increases, your provisions and write-offs will be slightly higher. But if you really look at the standpoint of how the credit cost has panned out, I think it is very well within the accepted range of 1.25 to 1.50%, which we had given. So there is absolutely no stress if you really talk about in terms of the asset quality which is coming in, And the provision which has moved in, technically for a quarter-to-quarter basis, overall, if you look at the entire year as such, it's been just about 130 crores which has been done. But the final quarter, definitely, yes, you want to clean up everything which has probably been there. And when you talk about GNPAs were 2.40, it has moved to about 2.49. It's 0.09% if you look at the overall base, which is not anything which is significant, And 0.09% definitely does not talk about the overall stress coming in. It's just a balance of how your denominator base grows and how your collection efficiency move on.
Okay, before we move to the next question, Hormaz, just 1 second. I think those are really important flashes on surrender value. We really thought the matter was over and done because there was a draft consultation paper. Obviously, the industry was pushing back against it. Then we had the final norms come in just, I think, a couple of weeks back, and they seem to be more or less in sync with what the industry was asking for. But I think this is a story that Yash is picking up, that the IRDAI chairman doesn't seem too happy with the pushback from the industry. We'll, in fact, try and get to Yash in a bit. The stocks have already started reacting. That's an important story breaking on the screen. So just thought we'll address that. But Hormaz, for the rest of the conversation.
Right. But yeah, this was something that Yash had highlighted earlier as well. So we'll get in touch with him very soon. But Mr. Singh, I had to ask you about continuing with that asset quality bit you meant. But are you seeing some stress on the ground when it comes to the rural areas or the rural markets? Do you expect your asset quality to continue trending down after this slight aberration that you have seen in the fourth quarter?
So if you really look at the guided range, I think that's more important to look at rather than looking just at a pure number, And what I feel, as per the ground realities as such, and as well the collection efficiencies which I mentioned, there's absolutely no stress which is building up, A normal asset credit cost technically and the portfolio quality based on the collection efficiency of about 98.6%, definitely revolves around the stable base where I think the GNPA and the credit cost will move in, And that's what the guidance also we've given of about 1.50% to 1.75. So if you look at the complete year for the next year guidance also, this is within the range of that 1.50% to about 1.75. So I don't think so there's any stress which is building up based on all these factors which I just enumerated.
What about the cost of funds, Mr. Singh? The last time you spoke to us, you had highlighted that your credit cost guidance for FY25 is in the range of 1.5 to 1.75%. Do you stick to that guidance? And B, is the worst for the cost of funds behind the company now?
So as I said, the guidance for credit cost remains same, across, for the next year also. And in terms of cost of funds, we've seen a small dip coming in our cost of funds, about 30 basis point to 40 basis point we have seen in the last quarter of FY24. So I think, once this momentum has started with the upgrade in our rating, which is there, and I think we'll see further more traction coming in terms of lowering our cost of funds.
Okay, so margins, confident of maintaining it at these really elevated levels? I mean, 14% is fantastic. Are you confident of maintaining it here?
The full year is about 13%, and I think, we're very hopeful that we'll be able to maintain that NIM margin of about 13% for the next year also.
Okay, all right, Mr. Singh, we'll leave it on that note. Thank you for joining in. Good talking to you today, and good luck with the FY25. Well, on that note, let's take a quick break. We'll try and come back on the other side and address this really important story on insurance and what the latest thinking seems to be on part of the regulator. Come back with that and, of course, also discuss fundamentals of the market. We'll have Jyoti Vardhan Jaipur here joining in.